morning, everyone, and welcome to the European crossover webinar. And we did go and see the euro going and take this dip. We talked about the importance of this 13 level, which actually confluences here with the 61%, and we'll take a look at that. That gave a pretty decent downside target. If it certainly didn't look like it was going to go in and make a move, I mean, it was just barely pulling here. But one of the things that we looked at yesterday also, and see right there, came right in with the 61%, and that was confluence that we talked about yesterday with the importance of this level. If we were going to hold, we talked about the 1343, and the market got a little bit of a little doji there, but we continue to slide. But we talked about the importance of this 1372 also, and we tried to get above it. Looked like maybe we can start to establish a bit of a buy, but we started sliding back down. We went right to the 1313 right here. I pointed that out, I guess it was about a little over an hour ago when we had just gotten there. I think we were just starting to tick a little bit above, so good area for it to cover. Also, yesterday we talked about the gold, and we had 1219 as our bias chart support, and we talked about how on the exponential moving average, you know how well this plays real well, this exponential moving average. And so we've been on a sell for quite a while until we flipped to a buy here, and the momentum had changed. And when we got this little bit of a sell, we talked about, hey, look, you know, you're going to the Thanksgiving Day holiday. Let's see how this really pans out. So they did try and make a move here. But when we started to slide back, we talked about in the mid-session in the chat room, hey, look, this is really starting to lose its momentum. I said the momentum is waning, so here we go. We're starting to slide, and certainly we made it right down here to the 1219. Now, if any of y'all were long, I don't know if y'all took some money off the table and looking to just get back in to 1219. We said if they broke 1219, which they didn't, but if they broke 1219, I thought there was a decent chance we could make it as low as down here to 1212, and I thought that'd be a heck of a buy area here, really anywhere between that 14 and 12. But the 1219 held. That was our bias chart support, and we're getting a little bit of a short covering off of that. Also saw a look at the cable here. Remember, this is very key area, key support here for the cable. Let me find the old mouse. So we talked about this 2774, and that's a key daily closing level too. If we lose that, it really opens the door. We talked about that for a possible move down to 2560. Here's that 1219 on the gold that we're looking at for the support. And we mentioned the importance on a daily close on the dollar index of 97.14. We'll just take a quick look on that before we get to the news. But this is important that we hold in this area here. And we're actually starting to even slide beyond that. Look at that. So we had that 2774 here. And if we do end up losing this here, there we go. If we end up losing this, and this is on a daily, let's go on. There we go. You see right there. And it certainly looks, we need to recover that 2774 before the daily close. If we don't, we're likely to go on. The next target would then be 2564. And certainly the way things are looking, it's like, I thought we would have had a big reaction with the Brexit news or over the weekend, and they opened up, and they just opened up rather timidly. And so because of that, you can see it's easier for the downside. And now we're getting below this 2774. The door is really open if we close below that for them to go in and move down there to potentially to 2564. That would be where they'd be eyeing. Whether we get there or not, we'll see. But that's the target they'd be eyeing, would be 2564. We talked about the 1309 area here in this dollar yen here, and that mentioned it here that in the chat room too, that the next target, now that we got above this, because we talked about this area here, this 1399, we were able to get a close above it. Here's right there. There's that 13. You see right there, it was 8.5, so it's 1309. Well, by the time we came in yesterday, we were just above it. So really, any pullbacks here, we talked about that would be well supported. And although we said, hey, look, there's a resistance level here, the real key level is going to be here at 1369. And you can see the importance of 1369. So it's going to be, we'll figure out to see where the market goes, but that's where they wanted it. Once we were able to get past 1329, and also we mentioned 1321 on a daily, right in here. There we go. You see right here, there's the 1320. It opened the door for us to continue to move higher. There we go. You see right there, 1321. So that has pushed and opened the door for us to move higher here. The momentum's going in the way of the dollar yen, and certainly the next key level that is at 1369. Dollar CAD did make a push with the move in the overall dollar. We talked about, once again, this 32.54 in case people were looking to take the other side. But once again, it's all about the crude oil. So you have to see something happen with this crude oil. We're just not really seeing it. There's just a little bit of short cover maybe, but I would call it a dearth of short cover. There's just no real movement here. And that's kept the pressure on the Canadian currency. A little bit of a doji here, and just a gentle pullback, but this 32.54 is important. Certainly the Aussie's been under pressure now. Trump's already, given some his comments. They may even get tougher with China. I saw a story in the evening session, or you call Asian session, whether that maybe he was just using as a setup or a ploy coming into the talks. Talk are tough, but we'll see. But the market's going to go with what that is. Now, remember our area was 72.40, so we're still here at 72.43. But like I said, we talked about any moves back, the market's probably going to say, the risk is what if. So it's easier for them to sell. Why we mentioned, I think it was 72.95, I believe we said about the resistance. We made it up to, what was it, 72.80, but that was well in here. I think we may have been down here at the time. But you can see here that as we've come off and we've moved back up above that 72.40 by about 3 pips. But like I said, the risk is, and if they don't work something out, I kind of think they would find some kind of a equitable solution, even if it's only which one of the investment banks was saying, they might come up with something that just basically says, if everything's okay, then everything's okay for now. But if things don't work out as well, then back on with tariffs. So I think that may give a bit of allow for a relief rally at best. I think that may be a possibility also for the equities also. We mentioned on the dollar index, we talked about the importance of that 97.14. Well, we even got above it, and look how high we made it up here, almost to 31. You can see here, 97.2866, almost 97.29. We know here's the 97.31, with 97.33 being the 78%. So a pretty good area for them to move to. That obviously confluenced here with the euro, making this move down to, which we mentioned, the 13.13 level, and that's also confluenced with the 61%. So good area to go in and cover some shorts. Doesn't mean that all the blue skies ahead, but certainly would want to go in and lay off a decent portion of your shorts. Doesn't mean, like I said, we can't make a move lower, but for right now, I think we've stretched the boundaries on a short-term basis. We'll go in and take a look at the news. Canadian dollar near flat as the GM plant closure offsets the oil price rally. The Canadian dollar was little changed against its U.S. counterparts on Monday, as is a rebound in oil prices was offset by news that General Motors could close its plant in Oshawa, Ontario, east of Toronto. Hundreds of workers walked off the job, and Canadian Prime Minister Justin Trudeau expressed a deep disappointment after the auto manufacturer's announcement caught governments and employees by surprise. The closure of the plant reminded markets that Canada does have a little bit of a competitiveness issue, said Greg Anderson. Last week, Canada's government said it would allow businesses to write off additional capital investments to make them competitive at a time when the United States is aggressively cutting taxes. Still, Ottawa did not announce measures that would help the country's energy sector, which has been hit hard by depressed oil prices. The price of oil clawed back on Monday. Some of the previous session's steep losses, U.S. crude oil futures settled 2.4% higher at 51.63. And this certainly, like I said, we're seeing a little bit of a minor, and what I referred to earlier was a dearth of short covering. But wow, look at this, unbelievable. So when you look at this and pull this back, look at this. And this is on a 30-minute chart. Not the 2-hour chart that we're looking at, which goes further back. But remember, all the way to 77. So we've lost $27, and so you're seeing a dearth of short covering. Certainly, anything that's not going to necessarily help the Canadian currency. Speculators have added to their bearish bets on the Canadian dollar from the US CFTC, and Reuters calculation showed short positions had increased to 6,200 contracts from 2,791 a week earlier. Data on Friday showed that Canada's annual inflation remained above the central bank's target for the 1 month straight in October, but markets saw a few signs that the Bank of Canada would hike interest rates next month. And certainly after what looks to be a possible auto plant closure, I don't see why they would do that at all. Seriously. Unfortunate news. Australian and New Zealand dollars near recent lows on Sino-US trade jitters. The Australian dollar hovered near 1 week lows as markets were nervous before a crucial trade talks between the leaders of the United States and China, while New Zealand's currency remained frail. After recent battering on poor economic data, the Aussie dithered around 72.25, not far from last week's low of 72.02. The trade-sensitive currency has so far enjoyed solid gains in November, rising about 2% as investors had hoped for some resolution in the bitter Sino-US trade tariff battle. President Trump, however, put a damper on such optimism in an interview with the Wall Street Journal late on Monday. He told the newspaper he expects to move ahead with raising tariffs on $200 billion in Chinese imports to 25% from 10% currently. He said he was highly unlikely he would accept China's request to hold off on the increase. Trump and his Chinese counterpart, Xi Jinping, are set to meet later this week at the G20 summit in Buenos Aires. Australia's economy is heavily dependent on exports, with its fortunes tied closely to China, so rising global protectionism is bad for the country as well as its currency. Apart from Trump-Xi meeting, markets will focus on a speech by Federal Reserve Chairman Richard Clarida later on Tuesday, ahead of an appearance by Chair Jerome Powell the day after. Traders will assess whether the less hawkish tone continues to permeate the Fed public appearances. A soft tone may help the odd, but we still prefer to sell rallies. Currency got a beating on Monday, the Kiwi, on a surprisingly soft economic data that showed no growth in real estate sales. Investors will keep an eye on the central bank's yearly financial stability review due Wednesday, at which policymakers will likely address whether they are ready to further relax mortgage lending restrictions. Be one moment. And on to the sterling. Sterling weakens after Trump says the Brexit deal may hamper trade with the U.S. Sterling slumped versus the dollar and the euro on Tuesday after falling through some key levels overnight on comments from President Trump that a Brexit deal could hamper trade ties with the United States. Theresa May is facing an uphill battle to win over critics in her Conservative and opposition parties in order to get a Brexit deal approved by a divided parliament. Those tensions are weighing on the short-term outlook of the pound. You have comments from Trump on the possible trade deal with the UK after Brexit, and there's more uncertainty regarding the future trade agreements of the UK following Brexit next year, says Sebastian Felchner, analyst at DZ Bank. Against the dollar, the British currency fell by more than 0.5% to 27.34, its lowest level in nearly 2 weeks. Sterling's losses were compounded by the fact that it broke through a key support level of around 27.70. Well, yeah, we mentioned that just a little while ago, and we mentioned it yesterday. This is and we have that on the bias chart. On the daily chart for the cable, and see, where the heck is our, oh, there it is. There you go. Yeah, we mentioned here the 27.74, that's very key here. And if you broke past that on a daily close, it really opens the door. And that's why, like I said, when we looked yesterday, at support, when we were trading up in here, we said, hey, look, you can find a little bit of support here, but where the rubber meets the road is going to be 27.74. You get a daily close below that, and wow, as they say, no bueno. We'll be I don't even think you look at 27.01 because they'll smash through that. When I say smash, I think that it'll be attracted to hit the stops. How much further beyond, we'll see. I mean, there would obviously be some additional support coming in right here, which would be a target for them to go 26.24. But the door is really open. If they get that daily close, the door is certainly open for a test of this 25.64. Obviously, before that, we have 26.24, but they'll want to test that and test the stops. And you can imagine people are going to be concerned is, wow, I wonder how many stops below 127. So, and remember in the past, 26.94 was a pretty key area. So that's really what you'll be looking for, which is about 50 pips lower than we are right now. And what kind of stops we're going to see just below that. Lee Hardiman, strategist MUFG, said it's looking increasingly unlikely that May will manage to get her Brexit deal through Parliament. Positioning also offered little respite for the British currency after a large chunk of short positions were whittled away in recent weeks, leaving the pound more vulnerable to losses. Trump talk pushes the dollar to near 2-week highs. U.S. dollar rallied on Tuesday after President Trump said that he would push ahead with tariffs on Chinese goods, fueling concern about a Sino-U.S. trade war and boosting demand for the greenback. Sterling was weaker across the board after Trump said on the Monday the agreement allowing the U.K. to leave the European Union may make the trade between Washington and London more difficult. Separately, Trump told the Wall Street Journal he expected to move ahead with raising tariffs on $200 billion. The threat of an escalating trade conflict between the world's two biggest economies is a major source of concern for next year amid expectations the world economy could slow. The dollar index, which measures the dollar value against 6 other major currencies, rose 0.2 to 97.28, its highest level in almost 2 weeks. And once again, for those of y'all that are coming in, we talked about the importance on a daily basis of this 97.14 right here. You see, it's going to be interesting, or it's going to be key to see if we can retain this close. You can see that's very important here, 97.14. We are above it, but at the same token, we've come right into the 97.31 on the 2-hour chart, just a hair below it, with 97.33 being the 78%. So very key area right here. And while we're starting to see a little bit of short covering here and some support here for the euro at the 13.13, which confluences with the 61%. The greenback has advanced over the previous 2 sessions as investors sought the safety of the world's most liquid currency, so fears that the global economy recovery was losing steam. At the G20 meeting in Buenos Aires on November 30th, Trump and Chinese President Xi Jinping are expected to discuss contentious trade matters that would have an impact on trade-sensitive issues, such as the Australian-New Zealand dollar. The upcoming meeting between Trump and Xi is pivotal going into the year end and for the outlook for global growth, which has shown signs of slowing. If there's no breakthrough, that makes it more likely that more tariffs will be imposed and increases downside risk to trade. With the spotlight back on trade tension, the Australian dollar gave up much of its earlier gains to stand at 110% higher at 72.30. And on a little bit of a different thing about the Euro bonds and a plan B if no Brexit deal. The London-based bond trading platforms and investment banks running European government debt sales are accelerating plans to move across the channel. Fear a no-deal Brexit will leave them unable to serve continental clients. In the latest high-profile move, the London Stock Exchange said last week that its MTS cash platform would shift a fifth of its trading volume, which averages 13.4 billion euros a day, to Milan. A trading in British government bonds will stay in London. Rival broker tech is moving trade in euro-denominated repos and government bonds to Amsterdam by February. Multi-dealer electronic platforms, TradeWeb and Market Access, which connect investors to bond dealers, have also made preparations to move business from London to Dutch capital. Wow. The MTS moves shows the industry is increasingly choosing to vote with its feet to avoid losing passporting, the automatic right for a firm registered in a European Union country to do business with any other member state after Britain leaves the bloc in March. Passporting has allowed a large chunk of the trade in European government bonds, worth tens of billions of euros a day, to be done through London via a network with investment banks, interdealers, and trading platforms. Prime Minister May's Brexit agreement with Brussels allows for a transition period when rules on relations with EU countries, including passporting, remains unchanged. However, the deal faces strong opposition at home, and the Parliament fails to approve it. Britain could leave the European Union with no transition and no passporting. If there's no deal, Brexit, we would have a European passport. We wouldn't have a European passport anymore, and that would no longer be a designated platform for European Union debt management offices. Wow. Even a no-debt Brexit deal is not necessary. A very high probability can MTS afford to take the chance? No, it's too huge a risk. Continuity of services is a must, said the official. Even if the Brexit deal wins approval, the transition period is supported to expire at the end of 2020. After that, British-based financial businesses could be governed by equivalence, a system which offers limited access and can be withdrawn within a month's notice. Wow, that's a lot of risk. Bankers say that as the March deadline nears, they can no longer look past the risk of losing passporting rights at a stroke. Plan B is slowly becoming Plan A because it's becoming late in the day with the Brexit negotiations and we are running short. So far, business continuity, we have decided to move operations relating to market making and European government bonds to the continent. Wow. While it's hard to quantify how much the shift would affect jobs in London, industry executives agree it would certainly drag on the city's preeminence as the European's financial center. Wow, that's really tough stuff. London-based banks are estimated to arrange around 70% of sovereign European debt issues, either by making market making and bond auctions. Barclays and HSBC are among the most active in European-dominated bond issuance. JP Morgan, Goldman Sachs, and Citigroup are also among the top 10 in Euro primary markets. Between them, they underwrote over $170 billion of Euro bond issuance last year. And lastly, let's finish with gold. Gold subdued ahead of the Fed chair speech and G20. Obviously, one of the things that they're looking for and may have helped gold. And remember, on our bias chart, we had 1219 as support. We talked about the exponential moving averages. And it's, even though we talked about this dip, maybe you can take it with a little bit of a grain of salt because it happened during holiday trading. But the market tried to make a move, but we could not get past this 1228. We actually used that as our bias chart resistance. And then we start to slide, and what I refer to in the chat room as the momentum was waning. So it suggested we continue to move lower. And we talked about a target being 1219. There was some support at 1222, 1223, and there was a pause there. But the target is going to be where the breakout area, which is 1219. We came down here. We saw some decent short covering. I think the reason you're seeing this short covering because right now the momentum is on the downside, so it's onto the short side. And I thought that may even open up the door for us to go to 1212. But right now, they're taking it easy, a little bit of short covering ahead of Powell's speech, because remember, we've already had, after they raised rates, and at the last Fed meeting, they were still talking about, oh, everything's a go light. They're totally ignoring everything that happens in equities. Well, now, it wasn't a day later, they changed their tune, and now they're singing about, oh, all is woe. We may see a slowdown, blah, blah, blah. So if we get that talk, and they're talking, and possibly from Clarita today, and maybe even from Powell tomorrow, what they're referring to as a less hawkish stance, then that would open up the door for this gold to bounce up, and the door's still open for 37, but certainly momentum-wise, it's on its back foot. So let's go back in here to the news. As I said, investors will hold steady until the minutes of the Federal Reserve meeting are released and more clarity emerges around the trade conflict leading to the G20, said Daniel Hines in an interview with the Wall Street Journal. He talked about that. President Trump, he continues to push things. When these concerns have elevated, investors who tend to seek the haven of the U.S. dollar itself rather than gold. It's been an issue plaguing the gold market for a while, Hines said. Gold prices have lost over 10% since April. The dollar index held the gains and hovered near its highest level since November 15th. Gold is highly sensitive to raising rates, which the opportunity cost of the non-yielding bullion. Lack of movement, the price suggests the market is cautious. I expect gold to remain supportive below 1207 with a weak tone, indicative of investor sentiment toward bullion holdings. The world's largest gold-backed exchange, Spider Exchange, fell 0.15% to 761.74. And let's go move into the buyers chart. So looking at the euro, we talked about this 13.13 before then. If we had some decent news, remember yesterday, we got the euro on the bid in the morning, and we got this move up in here, was the whole Italian thing. They were getting a little bit worried and cautious because of, internally they're getting some concerns here, because the thought was, hey, look, Italians are, they themselves are starting to lose some faith in their own assets. And they certainly didn't want to spark that. So now they've gone on their back foot. And I think and he's back from their own threats. The GDP they're looking at on the budget was 2.4 or 2.5%. They've now backed that down to about 2%. So that allowed this rally in the euro. But we had mentioned before was the importance of 1372, and we just closed a nudge above it, but then we quickly saw it erode, and that opened the door for us to move lower. Say, hey, look, they did get above it. They're trying to hang on. If they're going to hold, the first area of defense they need to come is at 1342. Tried to hold around that area, but we slid, and look, they ran out of gas. You can see right here at 1343. That was actually our bias chart. So what becomes support then becomes resistance, and it opened the door for them to move to the next target, which is this 1313, which confluence with the 61%. Well, right now, we just have to see what happens with this whole Buenos Aires thing. But for now, we'll have to go with this as 13. We actually have it here, 1313. But if you look here, we're closed. All right, there, 1310. So we're going to go with 1310, and we're going to use that. Essentially, it's going to be a trigger. And certainly it looks like, well, God, they're probably going to get right through that 1310, and they may. But your support comes in right here at 1285, and that's a possibility. But with the way you're going to look at it is 1310 is going to work like a trigger. If we start to slide by that, then it opens the door for us to visit 1285. I'm not saying we're going to 1285 at this point, but certainly the momentum and everything pushes us for lower. So you start out the week, you have some good news, and you don't get much follow through on the good news. Matter of fact, the whole reason why we've been going, so you think about this, you have to look at it in this way. The whole reason for most of these yank downs has been why? The Italian budget news. So you're like, okay, well, yeah, that has been it. Every time we get a bop up, the Italian budget news is right there, knocks it down. So all of a sudden, the Italians are shaking in their boots because now the countrymen are saying, you know what, we're losing faith in these assets, or that's a concern. So you're thinking, wow, guess what? They they said that they're going to pull back to 2%. Well, it's probably an empty, to a certain extent, an empty promise, but still it's a promise nonetheless. So you're thinking, okay, well, blue skies ahead. And we quickly kind of stop at that 1372. So all these big moves have been the Italian news. So now, not that everything was changed and everything is fine, but you would expect to probably rally up to maybe towards this 1420. So when we didn't even get this, really opens the door for them to push lower. So we've made it here to this 1310. The dollar's at a key juncture right now, and also we know about the 97.14. So my thoughts are right now is this 1310 is kind of work like a bit of a pivot. So if we go down there, then that next target would be 1285. I don't know if we're going to go and make a push lower. Here's what my concern is. Remember, they have was it Richard Clarida, Fed governor? He's going to be talking today. And remember, they changed their tune. Now everything isn't all rosy. Now it's they've been ignoring the equities for the last month and a half. Now the next day after they raise the rates, they're like, oh, well, now we're starting to get concerned and we're worried about equities. So now you may start to hear them singing the tune about, oh, we're a little bit concerned about China also. So that's going to allow the dollar to pare back. Your biggest mover on that's going to be gold, but it may stop the slide here. So once again, if you're short, be careful, because we could see the dollar going and pare back based on those comments, and could allow the euro to come right back up here. So I'm going to go and treat that 1310 and say, hey, that's support. So it'll work almost like a pivot. So be careful being short down here. With Fed Governor Clarida speaking and tomorrow Jerome Powell. You may start to hear them, talk a little bit more. They've already said that right after the last Fed meeting, which I think was irresponsible not to even mention equities. I mean, okay, fine, don't mention them, but then don't turn around 24 hours later and start talking about equities. But like I said, that's just life. But so going forward, my point is I think you better be careful, because that's what the market's looking for, is maybe the Fed will be less hawkish. If that's the case, then you could see it won't be so much a euro positive thing as much as it'll be a dollar negative pullback. But once again, the euro comprises 56% of the cash dollar index, so you could see a quick snapback. So be cautious being short down here. And we did hit a key level, 1313, which is confluencing with the 61%. So I would be wary about chasing this thing any lower or biting on moves that go beyond this area here. As far as resistance, it's going to be this 1372, because, like I said, Clarida is going to be talking. And if he sounds, more concerned, it's going to open the door for this market to go higher. And that, until then, this will be the standard right here, 1372. And if Powell were to come in and voice his concerns over China, and I think they're going to have to say something, boy, it's really going to open the door for right back up here at 1420. So be careful being short down here. So resistance is going to be 1372. And I'm just going to leave it for range for now. I think I don't want to flip to bearish and then turn around and flip it back. Let's just keep it where it is right now. Just be cautious down here. Let's go and move into cable. We talked about the importance of 27.74 on a daily basis. And that was our bias chart support from yesterday. And we said, hey, look, it's a very key area here on this daily. You lose that 27.74, and the next target, realistic target, is 25.64. Remember in the past, this actually held it here. Remember, we had 26.94, and that held it. I think the very low was at 26.89, and from there we saw a nice movement here. And even when we came down here, we mentioned, hey, we're back down here. Remember this 26.94. So we used it a couple of times, and that area held. But I tell you what, that's where they'll go to. But people are going to be shaking in the boots, wondering what kind of stops are below 26.94. So once again, the door's really open here for a potential move to 25.64, and things are very, very negative. Let's go and take a look at the 2-hour chart. I think at this point, we have to think about that level we've seen before, which was held on a couple of major, major bottoms or major or intermediate bottoms, however you want to go and refer to it. And there's our old friend. That stopped at the last time too. Look at that. We had taken a dip below, but look how that held up like a rock. So we're just gonna have to go with that for support because I think that's where they're gonna go to and see what kind of stops are below 26.94. So that's gonna be our support. Support, I mean, resistance. Now we had a real high mark on the resistance because, like I told you, you could get some short covering and it wouldn't change anything. That's why we talked about there was a little bit of resistance above, and I said, look, you can hit those stops, but until you get up there to the 29s, it doesn't mean a hill of beans. You know what I mean? And sure enough, now here we are starting to slide back down again. Resistance now, short-term basis, is going to be right there. 28.16. Right there. And we'll try and open this up a little bit better for you. That's going to be resistance. 28.16. It's 15.5, call it 16. Let's go move into the Aussie. And we had, what did we have? Oh, we had 72.26. Okay. Oh, we got down here as low as 72.13.5, called 14. And on the way down, when we had this move, everything was starting to look pretty good. We had a nice stout rally, and we talked about the market making a move down and some accumulation to come in at 72.40. You can see the move down here, and the market bounced off of that, actually rallied up to 72.70, then came down to test lows, reclaimed the 72.40, made it all the way up to 72.78, came back down, and you can see that 72.40 was holding. We made one last gasp or run up in here, but we talked about the market likely wanted to trade defensively going into that meeting with Trump and Xi Jinping. Now we're back at 72.40. That's the area we said, hey, look, you can start to accumulate. But once again, the market is going to be concerned. What are we looking at? You may see, because we came down here and took out this low and no fall through, you may see one more last move, but it's going to have a tough time. I think people probably want to be a little bit cautious. I would think that we're going to get some kind of at least what they referred to yesterday, a bit of a relief, good, I'm trying to think of the right way to say it, but relief positive news. Meaning, I don't think, I think it's like that one bank was saying, I don't remember who said it, is that they'll probably say, well, things are okay for now. As long as things, I think they're going to do that because it's going to be in the best interest, because if they come up with something really harsh and negative, if Trump does it, I think it's really going to hurt the markets and the overall economy. And because if you can't settle it now with this G20 meeting, then the market's going to look at it, when are you going to settle? It's not like as if you're going to have the G20 and nothing comes of it, and you go, okay, now we'll meet a week later or 2 weeks later. And as you get further into the holidays, then it's less likely for something like that to transpire. So I think you'll get some type of a positive news out of it. May not be necessarily lasting. That may open the door for this market to move a little bit higher, but certainly I think it's going to trade defensively. For now, I'll say right there, 72.88. I'm just moving this a bit lower. Support we had at 72.26. Let's take a look at that. But if you think about it, I think the markets are believing you're going to get something like that, because look at the Aussie. I mean, it'd been oversold for so long, but it's holding up relatively well. I mean, you would have thought after those comments, the story from the Wall Street Journal, you would have thought we'd have been tested at 71.86, maybe 71, 75 right in here. And the market's holding up relatively well so far. But you can see rallies that quickly sell into them. And that's actually one of the story we read. One gentleman was saying, we still rather sell rallies. So we'll put the support for right now. It's going to be 72.14, which is right. You can see right there, that close right here on this body. That's where they found the support. 13.5, we'll call it 72.13. Be cautious, because I think that may work as a trigger if we revisit that area again. And moving on to the Kiwi. Let's take a look here. We had 68.45, and we said that's been the resistance. Obviously, like I said, the little news, negative news coming out of ahead on that Wall Street Journal probably weighed a little bit. We'll still stay with the 68.45. It's going to be a very tough act to get beyond. We'll stay with 68.45. We actually went with remember, I think we stayed with the level which we had before, 67.58. Let's move that a little bit lower for risk, which would be right there, 67.35. See that right there? See that coming across? 67.35. And let's go into the dollar CAD. We did get above. Look, when we had here on actually yesterday, remember we had 32.29 because it looked like, hey, we're starting to slide back. We're not getting the extra bump from the, you would think with the crude oil still staying low, but the dollar moved higher. Okay. You see here, we pushed higher. We actually came close to this 31, but remember, 97.14 is huge on a daily close. And that certainly opened the door for us to move higher. We even talked about this 32.54. I'm thinking, okay, well, they've already slid back down here. This is probably be a little bit tough for them to get beyond. Hang on, this level is off. There we go. I thought, okay, it's going to be tough for them, but no, we moved back up here. Look at this. Obviously on the strength of the dollar, but certainly, like I said, look at this crude oil. I mean, it's just... it just doesn't look good. And here we have another issue that came up yesterday. And let's pull this up here. Let's go to the 2-hour chart. This has just been one heck of a fall. So, I think about it, the dollar could be stronger. I'm saying the Canadian currency could be a heck of a lot weaker. Look at this. This move from a $27 move from 77 to, I'm just amazed by this move. Because it's happened in a relatively short time. I mean, think about this. What was it in October? The first part of the month of October, just first part of last month. Here we were knocking on the door to almost 80, and here we are. We just came off of $50. Wow. But that being said, poor Canadian currency gets a double whammy because then they're talking about the closure of the plant in Ottawa. So, wow, I guess what do you think about this? This thing could have really ripped on that news on top of the crude oil. This thing could have easily have ripped up here to 133. So we'll see what happens here. Little bit of a medium-legged doji. We'll look at the what's been the momentum here. May have to see this market ease back a little bit, but I think that the Canadian currency could have even been weaker in light of that tough news that they just received. It's going to be interesting to see where we go from here. And like we showed on the CFTC, the positions they've increased their short positions on the Canadian currency. And wow, you know what? I can see why now. Even if the Fed's moving, if the Fed starts to, get a little bit of relaxed, you may see the Canadian currency pull back, but it's got some pretty decent headwinds now with crude oil staying that week, and then the whammy with the General Motors plant certainly doesn't evoke any type of confidence in any way whatsoever. So as far as resistance, my thoughts, my concerns is that probably see the Governor Clarita and possibly Powell ease back, and we could set ourselves up for a pullback here. We're going to go right there. You see this level right here. I mean, usually I won't go with the high water marks, go with the bodies. But in this case, you see here's where the market ran up that one and it came back down. Well, look right here, that's 32.72. And if you look, they came right up to that level and took it out by 2 ticks and pulled back. So we're just going to go with this high because that also confluences right here. So let's just call it 32.75 for right now. With the Fed may be starting to ease back a little bit on this super hawkishness, and that may allow the dollar to take a bit of a rest. But it's still, we'll see what happens. I think what I've been seeing lately in FX is you don't get those long moves you used to get where they last for hundreds of pips or even 300 pips or 250 or 75 pips. You get these moves and then they quickly end up giving it back. Then we reassert ourselves and we give it back. So we may see the CAD still going in pair back, but 32.75 is going to be key on the upside. Wow, we are running out of time. I got to hurry up and get this show going. Hang on. But I think the time was well worth it. But we are running out of time. Hang on. Support now is going to come in right there on a short-term basis. 32.23. Moving on to the dollar yen. Well, this one's pretty clear. We talked about that. Look, 13.69. There it is, right there. Clears the bell. We mentioned it yesterday. That's where we could probably get to if we got up there. And certainly, wow, they really made the strides 1369. Support now. Right there, 1326. That'll be support. Cash dollar index, we talked about this 97.14 early in this show because it's a key daily level. Let's just move back to that just to stress that. It's important that they close above 97.14. Wow, you know what? With the two Fed governors, Clarity and then Powell, with them now starting to change their tune a bit, we may go on and see this pair back a little bit. So watch that. It's going to be key if they can close above 97.14. We're going to keep that there as far as the daily. But the resistance here, $97.31 right there. 97.33 is a 78%, but we'll go 97.31. There we go. And support on the cash dollar index. 96.84. This was key because remember they started to slide back on here. Look at that. We saw this earlier in the session. That was yesterday. Okay, they got above it. They dipped below it, and notice how they were trying to get back above 84. And this is where the euro was starting to slide, and we're starting to see gold lose its luster or lose its momentum. Is when we reclaimed the 84, and we just started. And it wasn't fast. It wasn't. Now you look at this 2-hour bar. It looks like it really ran up. It wasn't. I was watching. And I'm like, okay, it's starting to reclaim. It was 84, 84, 85, 86, 85, 84, 86 and a half, and just gently just kept moving higher. And that's where gold, like I said, you really start to see that wane. So it's going to be 96.84. And why these levels are so important. And I think they garner more importance now because these markets, these moves don't last as long. So these levels are very key. In the gold, we had 1228 yesterday and 1219. I thought that was a target they could go to. That's the breakout area here. So I don't really see anything that's changed in gold. Is kind of waiting and seeing what's going to happen with Powell. There's our breakout area. We've talked about it. It's been there since, Moses crossed the desert. Look at that 12.92. Remember, that's where, if you remember, this was months ago where we saw that pullback. Remember, we talked about the 12.19 and we saw this market pull back very nicely from that 12.19. That was a breakout area that allowed the market to move higher. They dipped below 12.19 but reclaimed it, went up to 37. Once we lost 12.19, it was, everything going to heck in a handbasket. That key 97 held, and here we back up. We reclaim 19. Everything starts turning up ahead, and where we go back to. And we talked about this last week, being a logical target for them to go back to. Well, they did come back here, this 12.19. I don't see any changes. It's going to be 12.19 and 12.28. No changes. Clarity is going to be speaking. The gold is looking for any type of softness on their side, concerns about the economy with China that will allow the gold to make that move to 12.37. So no changes there. Going here to the 30-year bond. Wow, we're still holding up very well here in this bond. Wow, very surprised here. So we had 40.11. I think we kept that one here on the bonds. We did 40.11. And we had 39.19. I thought we might even be able to get past 39.19. I thought, you know what, that's probably too close, but I guess it wasn't. Okay, the low was 39.20. And I think that's going to work as a pivot. If Powell does start to backslide a little bit, you'll see this bond really start to take off. So no changes in the bonds here. Let's go on and move on now to the bunds. We had 60.89 and 60.53. We did get a jump up in here, so it's a bit of a surprise here, but the resistance will come in here at 61.09, and the support, at least for now, I'd like to see that a little bit lower, right there, 60.68, 60.68. And 61.01. And on to the DAX. We did get a relief rally. We were looking for 11,451 and 11,239 for support. We made it up to 11,440, and there's our 11,451. That's going to remain the same. And the support, we went with the levels. There's 11,240. I think we call it 11,239. So that's going to stay the same. Disc, we came within 11 ticks of hitting this. So there's a bias chart complete today. Once again, be aware that Fed Governor Richard Clarida is going to be speaking, and the thoughts or the concerns is everybody's thinking is that the Fed's starting to backpedal a little bit. Now they're starting to voice concerns. They're less hawkish, and that's what's keeping the gold from pulling back so much. And one of the things you can have to be concerned when you're trading the majors, okay? So you can see, be careful chasing this euro down here, because once again, if they come in less hawkish or they start speaking about concerns, which they're starting to change their tune, that's going to open the door for a rally. Not so much a euro positive, it's just going to be a dollar negative in the sense that we may see the Fed pare back a bit. But thanks for joining us here on the European Crossover webinar. Good luck trading.